Hey folks, Dan Frio here, the rate update. Today's November 9th, 2020. If you were trying to be a pig or a hog, you got slaughtered today. Be right back. I'll show you what happened with the MBS market and mortgage rates. Don't go away. Okay, so I was saying previously and been trying to preach to everybody, if you like the rate where we're quoting now, lock it in. Quit, you shop, keep waiting. I kept saying, as soon as some good news comes out, or the pandemic, we come out with a vaccine, this is good news. You're going to see rates start to take a hit. And everybody's like, well, the Federal Reserve came out and said they're not going to do anything for, at least 3 years. I don't care what the Federal Reserve is doing in regards to the federal funds rate. The Federal Reserve is just trying to stabilize the mortgage market to keep interest rates kind of stable in the mortgage industry, but they can only do so much. When we start getting some good news, like the economy kicks back in, we get a vaccine, which we might have today. The election's somewhat over. That's a whole different animal. But the markets are anticipating this. Biden wins the election. There's a vaccine in place. And the Federal Reserve is going to be, basically keeping things, interest rates as low as possible. Due to all that stuff, we had the stock market was up at 1,000 points or 1,100 points at one point of today. Mortgage-backed securities got clobbered. And again, it's all good. The good news in the market or in the world is great for stocks. It's terrible for bonds. And bonds determine the mortgage rates. So let's get at it. What am I talking about? So let me make sense of all this. We follow this, or I follow this, or you follow this if you follow my channel. What's going on with the mortgage-backed securities market? Well, what is a mortgage-backed security? It's a bond that trades that determines, or it's the biggest determining factor of mortgage rates. All right, that's here. So as the price of the bond goes down, rates go up. The further the bond price goes down, the higher the rate goes up. Today we saw a 66-point move, and that's what we ended the day at. That's one of the biggest moves I've ever seen in the 32 years I've been doing this. The good news is we were up about 60 or 70 basis points last week. We gave it all back. And now we're teetering below that line, and we're teetering on some areas that kind of concern me. So let's get on to the charts, and then I'll give you the news. So what we follow here is this number here, and it's the price of the bond. Again, as the price goes down, rates go up. What scares me is this. We basically gave back all of the gain that we saw last week. So last week we were I'm anticipating we should be stagnant right in about this area here. Okay, and I'll explain that in a second. We deviated from that. And if you don't believe me, go back to my videos and I explained. I'm like, guys, we're here. This is a knee-jerk reaction to the election. We're going to come right back down into this range. I hate when people, they try to play armchair quarterback and they always say, well, I knew the stock market was going to crash. No, guys, I'm telling you, I was calling it within days. Obviously the stock market is going to crash at one point in the next year, 2 or 3. And those Einsteins that come back say, see, I predicted it. No, you kind of didn't. It's easy just to say, well, it's going to snow one day in December. Well, if you can specify the date and time, then you got my attention. Hope you get where I'm going with that. So we had a little bit further of a knee-jerk reaction than I thought. I figured we would come back down into this range. Well, we dove a little bit deeper than I thought, but then we had a little bit of retrieve during the day. So let me go through this with you just to explain to those out there that I'm not just making this stuff up, and there is educational tools behind and research behind what I'm telling you guys. There's lines through here that we follow. This, and then the other line fell off the chart. These are what we call Fibonacci levels. These are ceilings and floors to where the charts are. Okay, this was a ceiling just a week ago because you can see how we keep hitting this level and we keep stopping and stopping and stopping and stopping and stopping. Well, we haven't hit it for a while. So we exceeded that last week. And I'm like, it's an anomaly. We're going to come back down. We should be in this range here. Why should we be in this range here? Well, one, it's a pivotal point where the Fed is trying to kind of stagnate things. They like the levels right here. You can see there's other lines in here, this purple line. There's a brown line and a black line. The brown and black line condense right in this range here, and they are a 50 and 25-day moving average. That's where we should be staying, until some more good news or real good news comes out. Like we do have a cure or we do have a vaccine. We think we do. We think we have a presidential election that's completed, but there's still ifs about all that. So people are knee-jerking on all of this. So we should be right in this range here, okay? We did hit the 100-day moving average, which scares me, because if we drop below there, we could just keep crashing, all right? But the Federal Reserve is involved, and they're buying billions and billions of mortgage-backed securities on a daily basis to keep stability in the markets. So you're probably going to see tomorrow that we come back into the norm. Today's move is huge, bigger than what should be. Okay, I'm going to take it for there. So if you got a quote and you have not locked in yet with another lender, I highly suggest you get the second opinion, or you get a new opinion from them, and I'd be more than happy to give you a second opinion. I locked most of our clients in this range here. I locked everybody again right through here. You can go back to my videos and validate that. This, I came out and said, guys, I missed this. But I would say within a couple days, we're going to be back to the norm. During this time frame, I also posted videos saying, MBSs are up 70 something. Our rates have only dropped 0.1, maybe 0.2. So we didn't price this in or lower rates dramatically like in a normal market you would have seen. No lenders did, because we all anticipated it to come right back and fast. So that's what's happening there. So I called that one. What's happening today in the markets? Well, we saw with the Pfizer coming out saying they have a potential cure for this. The stock market at one point was up, I know this morning, like 1,100 or 1,400. Ended the day up 834. Great day. It's great news. I hope that we come up with a cure for this virus. It would help things tremendously. I want to take the uncertainties out of the market. So the next thing is, what did we get today in regards to news? Really nothing. The 10-year Treasury note, nothing there. There's really nothing coming out on Tuesday. There is nothing coming out on Wednesday. Some employment numbers, Federal Chairman Powell, he runs the Federal Reserve. Inflation numbers, theirs coming out on Thursday. This in a normal market would be a market mover. But again, more focus is on the pandemic, the election. Is the government going to pump in stimulus? All this other stuff. A lot of the technicals are out the window, and I hate that. I'm still trying to make predictions. I'm doing pretty good at it. But some of this stuff is just, you just can't see around the corner. Okay, so that's what's going on with rates right now for the day and what's going on in the markets. So let's go over what are rates done today. So here's where my rates are today. Are they going to be these same numbers tomorrow? Probably not. When we ended the day on our rate sheets, the MBSs were down 44. We ended the day down 60 plus. So you might see rates go up again in the morning when we post. Depends on how the market's open. But let me just explain the rate sheet real quick. There's two ways of looking at if you're looking to refinance or buy a home. Okay, I'm going to go over the top section right here. If you're looking to purchase a home, here's what your rates would be. If you're doing what's called a rate and term, this is what your rate would be if these other parameters come into play. I got a video I did a couple weeks ago kind of going over a rate sheet with you. There's probably 12 to 15 different factors that go into your mortgage rate. That's the whole gist of me posting these rate sheets. These rates can change throughout the day, every day. So you have to call in and get a specific, what is your rate? But let me just go through this again a little more in detail. If you're purchasing a home or doing what's called a rate and term. Rate and term is you owe $250,000 on your mortgage. You're looking to refinance. That's it. You just want a lower rate or shorten your term or extend your term or whatever. You're not getting any money. You don't want to walk away with money. If you want to walk away with money, meaning you want to put in a pool, finish your basement, pay off credit cards, pay off student loans, pay off a car loan, that's called cash out. Okay? So, other factors involved in this is your credit score. I'm using 740, 700, and 660 as your credit scores. And this other section is what's called the loan to value. Your loan to value broken down in simplest forms is your loan amount divided by the value of your home. So a $100,000 loan on a $200,000 property is 100 divided by 200, 50%. So that number would be 50. So let's break this down. 740 credit score at 80% loan to value. If you're purchasing a home or doing a rate and term, your rate today is 275 on a 30-year fixed. APR 2.852. I'm not going to say APR in every one of these because it's going to get redundant. I'm going to give you too many numbers and bore the heck out of you. A 700 credit score at 80% is 2.875. A 660 credit score at 80% is 3.5. Do you see how as the credit scores go down, everything else is constant? The rate went up 0.75. The parameters behind this is a $250,000 loan amount, okay? So now let's go to if you're looking to cash out. 740 credit score, I changed the loan to value to 75%. Okay, but a 740 credit score is 2.875. 700 credit score at 75% loan to value is 3.375. 660 at 75% loan to value is 4.625. So you see, when you call in, and I always ask you, I need some more information to figure out how I can quote you an accurate rate. If you're like, oh, I need a $250,000 loan and my score is 740, what can I get? Well, probably this. But do you have a single family home, a 4-unit, a condo? Is it an investment property? Is it a second home? Are you looking to cash out? Those are all going to play a factor in this. So let's say I just generically say, okay, it's 2.75. Then I pull your credit, and then you say, well, I wanted some money back. I pull your credit, and you're a 660, and you want money. Well, now your rate's 4.625. And you're like, well, you told me 2.75. Well, yeah, but you didn't answer all my questions because I'm always going to ask you the parameters to narrow down exactly what I can get you. Okay, so that's that part. On a 15-year, what do I offer? So the same thing, purchase, rate, and term. These are your credit scores, and then we have cash out down here. 740 credit score, 225. 700, 225. 660, 2.375. It's a shorter term, so less risk for us. So that's why the rates are lower, but you can see the rate does go up as your scores go. And then cash out, 740 at 2.5, 700, 2.625, 660 at 2.75. So those are my 15-year fixed rates right now. So now let's go to the government programs, FHA and VA. This is purchase or refinance. You can go up to 96.5%. At a 740 credit score, your rate's 2.625. You have that rate all the way down to a 600 credit score. 600 credit score, that's where you're starting to get hit, and you're at 3%. A lot of times, I might come back to you and say, I'll always say too, is your lender putting you into the right program? For example, if you have a 600 credit score, you can't fit into a conventional loan, but let's say you could and you were at 660. That rate would be 3.5. Well, if you go down here to the FHA, you could probably get 2.625. So what would you rather have, 2.625 or 3.5? That's why you have to know what program you're getting into and why. Your lender should tell you. If not, call me. I'd love to help. VA programs, this is awesome. If you're a veteran, God bless you. You can go up to 100% financing. The rate's at 740. All the way down to 600, you get 2.625, all the way down to a 600, and then that rate is 3. Okay? And then jumbos, these are what we're known for. Loans at $1 million. 780 credit score at 75% loan to value. This is purchase or rate or term refinances. You can get a 3% rate, 30-year fixed, not an ARM, not an adjustable, not a negative AM, not a teaser rate. It's a 30-year fixed. 760 score, 3.125. 740, 3.25. 720, 3.375. That's my rates for today. So now you're like, Dan, I like this. What do I need to do? How do I get a hold of you guys? How do I at least, get the ball rolling? So there's two ways to do this. One, if you already got a quote, I asked you to get an updated quote, because if you're not locked in, your rate's going to be higher than what they quoted you. I can almost guarantee that. So get an updated quote and then send that to me. I need all the pages. So I have a lot of people saying, hey, Dan, here's my loan estimate. They'll give me page 2. Well, there's going to be 3 pages. I need all of them. One, I need all the data that as I went through the rate sheets, you can see I need all the data that's there. I'm not asking for anything out of the ordinary, but if you want a quote from me, I need the most detailed information from you so my rate quote is accurate. So if you're in the process now, you haven't locked in, get a new loan estimate from your lender, send that to me. We'll compare what I can do versus what they can do. If you got quotes from somebody, I need something in writing. I can't just say, Dan, they quoted me 2.25, no cost on a 30-year fixed. Guys, it doesn't exist. It doesn't exist. And I'm getting people sending me emails such as that. If you can get that, God bless you. Don't even shop around, because those rates are nowhere to be found. And if you got it, be careful. Because I have people calling or emailing me every day horror stories saying, they quoted me this, and now all of a sudden I'm paying $5,000 in fees I didn't know about, and they're saying, well, the rates went up. Well, are you locked or not locked in? If they're locked in, the rate's locked in. So that's that. If you want to just talk to us and say, okay, what can you offer and so forth? Let me show the website to go to. This is the best way to reach us. Go to therateupdate.com. Okay. You can scroll down. Here's our 800 number to give us a call. Right there. A lot of people email me, and I ask you to email me that loan estimate or a fee sheet, or if you haven't done anything yet, send me your mortgage statement. Let me figure out what I can do. Email me at D for Dan, Frio, which is Frio, at preferredrate.com. We have a new tool on the website. It is awesome. A home valuation analysis. You click it, you put in your address. It'll give you all the details you need to know about your house. You can follow, it'll pull public records, it'll pull pricing engines, it pulls all kind of stuff. This thing is crazy. I can't even explain it. You got to just try it. It's free. There's no cost. There's no gimmicks. There's nothing. You're put into my database. You're not going to get sold off as data or whenever. You'll get some emails from me with updates once a month on what's happening with your home, the value of your home, and how to take advantage of maybe a refinance, pulling out some cash, or if you pay it extra each month, how much would that affect your payoff, and how quick could you get that loan paid off? If you want to get started right away, you can get a free quote. You'll go into our system. One of my mortgage advisors or myself will be calling you probably within 10 or 15 minutes to go over some numbers with you and answer any questions you have. If you really want to get the ball started, hit the Apply Now button. Click the loan officer. If you want to deal with me, you're more than welcome to deal with me. Click Dan Frio. It'll take you about 5 to 10 minutes tops to go through the mortgage application. If it's after hours, I'll call you first thing in the morning. If it's during the day, I'll probably get back with you within 45 minutes to an hour at the most. Got a lot of cool tools up here for you. But that's it. Love to hear from you. Please, if you would, all I ask you to do is give me a thumbs up if you like the videos. Subscribe down below. Hit the button. Hit the bell so every time I do post a video, you get an alert. And if it's something you want to see, great. If it's not, pass. But that being said, be safe. Be healthy, be happy. I'll see you tomorrow, guys. Take care. Bye-bye.